Tom Lee is on CNBC once again here today, folks. Okay, we know we're still in a bull market when we see Tom Lee on CNBC every single week at this point in time, sometimes several times a week. He shares his thoughts on many various things here, stocks, where he sees the market going forward, recession, no recession, many other various things. And so I just want to jump straight into this one. I appreciate everybody joining me as always. Thanks for being here, folks. Also, if you want my free stock picking checklist, check out the pinned comment down there. It's absolutely free to get access to that. Alrighty, let's get into this. By the way, new all-time high subscribers. I appreciate y'all being here.
And you made that call of 100 points on the S&P. On a softer inflation number, and that happened. So then last week on Monday, we had you in again to talk about it, and you said you're still bullish. So Monday, I just did the math, 11 straight days in the Dow, so you were bullish on Monday, but you weren't going to say anything about the week. You're smart enough to stop doing that. But so you're got credit for another 6 out of the 11 days. So it's been 6 more days after that the Dow's been up. What did you see differently than people like Mike Wilson at the beginning of the year for you to be at 40? Where were you at the beginning of the year? 4,500?
4,750.
4,750 at the beginning of the year. Mike Wilson's now saying he was at 3,900. The bear case for him was 3,000 or 3,200. And the guy at Piper Sandler was at 3,000 was like a slam dunk for him for where it was going to go. What did you see that was different from these gentlemen?
I think the biggest difference was we were looking at the inflation internals and thought the inflation was on a glide path lower than consensus and even the Fed expected. So we thought there was a good chance the Fed could sort of back off its fight against inflation, and that would make it a 1982 moment because it's an inflation war. So I think that was probably the central thing. And the second is we had a lot more belief in corporate resilience. I think companies last year were given notice to prepare for this massive hiking cycle. They ran expenses really tight, and delivered earnings this year have been much better. So I think the combination would support stocks.
So what Tom Lee just described there is very important that everybody watching this video right now, you remember that for your rest of your life when it comes to the investing game, okay, in investing in public companies. Because I think one of the most important things to remember, especially when you're talking about grade A type companies, even grade B type companies, but certainly like grade A type companies, top tier companies, right, is these companies have the best management teams, the best CEOs, and many times the best business models ever in the history of mankind, right? And so to take an opposite stance, I believe those companies are going to falter. It's a tough proposition. It can happen every once in a while, but it's very tough because you got to understand you're betting against many of the most talented individuals in the world, right? In the world at what they do. And these folks find a way to make it through and make it out to the other side better and stronger, which is the amazing part, stronger than when they went into that situation. And we witnessed that in the great financial crisis. Many companies emerged out of the great financial crisis in a far superior position than when they went into the great financial crisis, especially tier A type companies and tier B type companies. Those companies were much stronger in 2010, 2011, 2012 than they were prior to the great financial crisis, which is absolutely kind of insane to think, right? But that's what happens. And so, that's just one of many various tough things to bet against tier A and tier B type companies, which are the companies, guess what, that drive the stock market. They are what drive the stock market up and down because they are the biggest weights in the market overall.
Just overall, Tom, just your approach to trying to decide how devious the market acts, and you can go all the way back to Jesse Livermore. It tries to do things to confound as many people as possible, so that not as many people are right going up or down constantly. It tries to do it. So if you've got a person that if you were all talking about a recession, and we're all talking about lower corporate earnings, and that earnings got to come down, and we're all talking about these things nonstop, and people are very, very, and say we're going down another 20% when everybody on the street knows what's happening, can't you just say that probably isn't going to happen, that it's already in the stock? If you have that job, why doesn't that inform you that maybe you shouldn't go with the crowd? Why can't they figure that out ever?
That's exactly right. At our company, we talk to our clients constantly, and that was also pretty evident. Every time the market plateaued or wobbled this year, our clients were ready to short and to sell. And even this week, the market wobbled a couple days last week, and people are ready to short the market. So I think we're still in a position exactly described, which is people are bearish and ready to sell. No one's really embracing this as an upward new bull market.
That's a great point. And if we were to go back to, let's say, a couple years ago, okay? Let's go back in time 24 months ago. What did we have at that moment? I'll tell you exactly what we had at that moment. We had a market that any sort of dip, people were ready to go all in. Like, oh, shoot, this stock went down 5%, margin out, call options, all those sorts of things. And now you get stocks to dip, like Tesla, Netflix last week, right? 5, 10%, whatever. And all of a sudden people are ready to sell them. They're ready to short them. They're ready to buy puts, right? It's just a very different mentality. We're in a much more scared market. And it's because of what we went through, obviously. It started at the very end of 2021, but certainly, obviously, what we went through in 2022. And because of that emotional damage, the market just, is in a place of very scared, just very scared and just ready to short and ready to buy puts and ready to sell at any reason, right? And I went over that with some stocks recently. I think I was talking about, stocks like Discover, and some of those, payment providers. It just seems like a lot of people are ready to sell those stocks at any chance they get. We looked at, 2 or 3 of them in a video. I think it was probably on the main channel a few days ago, and it just seemed like they're so quick to sell and to go ahead and take a profit if they have a profit on that stock, which you should have profits on those stocks. And so it's just a different mentality. We're just in a different market right now, and we're just working through it, and it is what it is.
I don't want to harp on Mike Wilson, but so he's finally able. You gotta somehow get yourself out of that pickle and say I was wrong. But his with the mea culpa, his year-end target's 4,200. So it's just more of the same, right?
Yes, that's right. You can tell people are still bearish because the strategist year-end target on average is 8% downside. And the strategists reflect the buy-side sentiment. So most professional investors think the market's going to go down between now and year-end.
Yep, 100%. These folks are still, you see sentiment surveys like AAII Investor Sentiment, right? Recently, we came in at, I believe, it was over 50% of investors are bullish on the market in the next 6 months, which is a very high number. But then you go ahead and you look at Wall Street. These folks have been bearish this entire year, and they are still incredibly bearish. Like you just said, look at their target prices for the market. 8% downside on average for a lot of these folks, right? That just goes to show you how scared the market still is, how uncertain Wall Street really still is, right? Interesting.
Yeah. So then
have you been wrong more often by being too bullish? Because that would be my problem, I'm sure.
Well, I've been covering markets for 30 years, so I've been wrong a lot.
On both sides.
Yes. I learned that being bearish was really painful when I did wireless. My most famous short sell call was Nextel, which did...
It's an important sentence he just said there, right? Been in the market 30 years, I've been wrong a lot. What happens is, especially with retail investors and a lot of new retail investors, is I think you have to be right all the time. And as you've been in this game 10, 20, 30 years, I've been doing it for 15 years, you're going to find you're going to be wrong sometimes. You're going to be wrong sometimes several times. You're going to sell stocks for losses, right? And for some newer retail investors, they think that's like defeat, and they think like, you got to pack it up and go home. But no, that's not the way anything works in life. You're going to have bad days at work. You're going to get things wrong, right? Doesn't matter what profession you're in. All that matters is you do your job very well over time, and it's going to stack up to a whole lot of money over time. And it's all that matters. There's no profession where you're perfect. The best doctors in the world screw up sometimes. The best surgeons in the world screw up sometimes, right? That's life or death. That's a whole different game. The best athletes screw up. Like this is what you have to go through, right? And so, as he points out there, he's been in the market 30 years. He's been wrong a lot. And I promise you, you've been in the market 30 years making predictions on stocks, the market, all these things. You're going to be wrong a lot. All that matters is you're right a whole lot more than you're wrong. And, as long as you do that, your money's going to stack pretty high.
Up for a long time, but then finally, essentially imploded Sprint. So, but it was a painful...
Jesse Livermore.
Is that why you're more optimistic now? Because you got burned by being bearish at times? I mean, if you look at the markets over the long haul, if you're doing this for a long time...
It goes to 800, from 800 to 45,000. It's probably good to be long most of the time.
Yeah. Well, I did covered wireless when it was 34 million subs, and it went to 7 billion, and everybody called it a speculative bubble sector for 14 years. So I think I'm just used to people being so negative about the future that we tilt a little more positive.
It's always more fashionable to be negative and to be, doomsaying, black swans, and all these things. You can always do better, and you can be short and be right, but you can be shaken. You got to have the financial wherewithal. Jesse Livermore eventually killed himself anyway, so you can be right, but you're still not going to be able to. You may not be able to last long enough to see that you're going to be right. So you're never. When would you turn bearish?
Well, I think we would turn bearish if there is a recession, because it is really difficult for stocks to actually rise through a recession.
So you don't think there's a recession coming?
I mean, eventually there'll be one, but I think in the time frame people are saying, 6 to 12 months, it's pretty difficult to. In fact, and we had 2 negative quarters of GDP last year. So in some ways.
So basically saying, next 6 to 12 months, not very likely of a recession right there. I didn't want us to just forget about that.
They already had.
In a rolling recession as well in different industries. Well, if we were going to have one, so now we're back to trying to figure out the discounting mechanism. So if a recession isn't coming in 6 to 12, let's say it's coming in 18 to 24, that still would only give us about 6 months more of bullish action.
That's true, unless, of course, the Fed starts easing or inflationary pressures disappear, because, there's a lot of potential stimulus coming. Mortgage rates at a 3.7% 10-year, the 30-year mortgage should be 5% or so, not 7%. When that drops, that's huge stimulus coming.
So that would make the recession shallow, or that would counteract the recession for the market?
It might even stave off a recession, because consumers aren't levered. It would actually be a lot of stimulus.
We might not have a recession even in the next 2 years then.
That's right. And companies batten down the hatches. They're not going to get tripped up.
They're going to do better either way.
Correct.
I was just thinking how your profession is a lot like seismologists, because it's really hard to claim, okay, here's where the next volcano is going to be. That's like the bears who do it. And even when they're right, like David Johnston he's the seismologist who warned that Mount St. Helens was going to blow, got everybody evacuated, but he died in the explosion because he waited to film it, and his calculations.
Come on, man. What is with these people always want to get on TV? Okay, listen. You really want to be on the screen so bad, I don't know, start doing some TikTok videos or post some YouTube videos or something, man. Come on.
Off, and it came out the side instead of going up the top, and he died as part of it.
Wow.
That's like the Livermore story.
Right.
Yeah.
You can't win, Tom. That's what I'm trying to tell you.
That's right.
And then you get all these right calls, then you die anyway someday. So, I mean,
it's creepy. It's creepy. You know what I mean? I don't want somebody looking through my window like that. It's creepy. Come on, man.
Really not. But maybe.
So congratulations.
Yeah. Bitcoin, that got you worried at all here? We had an actor on who. I don't know if you saw that. I mentioned, what do you think of that?
I think that there is a populist angle to what he was saying.
Have any of them done he said he did a deep dive. Do you think he understands anything about it? Or?
I think if someone did a deep dive and went around the world and talked to people who are using Bitcoin because they don't have access to banking, they'd have a very different view of how useful crypto is.
Can I defend the actor for a moment? A huge part of his thesis, I thought, was right, which is there are a lot of fraudsters.
I didn't have a problem with any of that.
The idea that the FTX and CZ, like all of these.
But Bitcoin doesn't care about who owns it or who's trading it or what exchange it's on. Bitcoin is
that there's a lot of fraudsters around this, and you got to be careful.
But the asset itself, that's like saying First Jersey Securities or Stratton Oakmont is a commentary on the underlying stock market.
That's right. And 97% of publicly listed stocks since 1970 have gone to zero.
Yeah.
So,
how many?
Wait, what?
Publicly listed stocks since 1970 have gone to zero.
On the underlying stock market.
That's right. And 97% of publicly listed stocks since 1970 have gone to zero.
Yeah.
So,
how many?
70%, but it's the vast majority of public listed companies go to zero.
70% of companies listed since 1970 have gone to zero. Wow, that's interesting. Very interesting. 1970, damn, that was a long time ago, I will say that.
You can look at a list of stocks that have moved around up 100%, down 60%, blue chips.
Yeah, that's right. Capitalism just fails often.
And there's stories, it's always what someone's willing to pay on any given day, even for a stock, especially non-dividend stocks. What are you buying there exactly?
Yeah.
Other than a story. Tom?
Yeah, and back in the day, a lot more companies try to go public. Especially obviously in the 90s. I imagine how many companies went belly up. Obviously in 2000, 2001, 2002, that were public companies. But because back then there wasn't really as strong of a VC kind of landscape, and so I think that was a factor as well. So, anyways, guys, appreciate you joining me as always. Tom Lee, still out here on CNBC very often, which means we're still bullish. Okay, at some point they're gonna stop having them as much. That's when the market's tanking. Okay, appreciate y'all joining me as always. Thanks so much for being subscribed. New all-time high subscribers in the history of the channel. I appreciate y'all. Also, get that free stock picking checklist of mine. That's gonna be pinned comment down there. You can get access to that. I'll go ahead and send it over. Much love and have a great day.